past performance is not necessarily an indication of future performance, as market conditions may vary. As part of my daily educational blog, I look at trades which I did and which I did not do, as well as the trades which succeeded and failed. It's time to look at a failed trade today. This is, in fact, the GBP JPY 1 minute chart. On the onset, let me tell you that we failed miserably in this trade. I went short and we got out at 53 pips. Now, why 53 pip loss? Why do I call it a absolute miserable trade to fail? Um, because I did not have a confluence of events for my entry out here. I'll tell you my reason for entry. This is the daily chart. We're grinding ourselves lower. This is the 4-hour chart. We're grinding ourselves lower. And I told myself that perhaps it is time to sell into any rally which comes about. And that's what I did. If you can see that I sold into a rally. Let me pull up a 5-minute chart to make it look better. We had this rally come up. We were in a nice downtrend, and we had a sudden rally come up, and I sold into that rally only to be stopped out at 50 pips. The direction was absolutely correct. What do I mean by the direction? That being short in this market is absolutely correct because we're trading with the longer term trends. However, uh, there wasn't any confluence of events why I would have wanted to short from this region. I'll draw a horizontal line here. All right. So we were at this particular position, and I thought if it rallies, it'll rally and it'll stall at these resistance levels. But it did not do that. What I should have actually waited to do is I should have waited for a rally, and I should have looked at a 1, 2, 3 top formation or a double top formation. Perhaps, let me zoom right into this. If I'd waited for a 1, 2, 3 top formation, we did not get any. We had a swing point, and then it did not manage to penetrate below these swing areas. So we had a swing point out here and another swing point out here. If the market did try to go up and fail, and then perhaps it would have been a good decision to go short, but that did not happen. Again, let's see what's happening right now. Perhaps now might be a good 1, 2, 3 top along with a double top. Why is that? We have this top right here. So this is a double top. The price has come down and it's trying to rally, and now if the price fails to rally and drops down below this level, I believe it would have been a safer place to go short from. Having said that, even this particular trade can fail, but it's a better, well-planned trade rather than um, selling into strength and being in pain all the time. These are the trades which I normally do not recommend, but I have no idea what happened to me. It wasn't well planned, and I just accept that. Um, I'll issue a trade alert as of this point, which would be valid till price either penetrates this 142.85, and if price penetrates 142.85, I'm not going to go short. However, If price does not penetrate through 142.85 but penetrates to 142.45, I want to go short and have a 50 pip stop loss. So that's a trade alert which I haven't yet sent, which I will be sending now. If the price decides to rally and go beyond 142.85, I am interested in selling at 143.03. Let me pull up the chart as to why I want to sell at that particular price. This is the failed trade right here. Now, as you can see that we currently are at a 78.6% retracement, and we perhaps double topping at this retracement. So a break of the 170 or 142.45-ish area should signal a sell trade. However, if it breaks through that, what I expect to happen is I expect to have this 78.6 fib play, not the one from this high, but from this high. And if that's the case, then we have a confluence of events at the 138.20% extension of this particular move. Not only that, we also have another extension line. You see that we have another extension of this entire move. Let me delete one line of this entire move, which is a 61.8% extension of this move. So this is a confluence of events. 78.6 resistant previous resistant levels, a fib extension of this move, a fib extension of this move. So I'll be more inclined to short it from 143.05-ish area. Now I'll issue the trade signal right now, and it will be posted in the trade signal section of the website, as well as you should receive the email. There are two trade possibilities we're looking at. Sell euro yen at 143.05, or sell pound yen at 142.45. If pound yen does not penetrate through 142.80.